G'day listeners and welcome to another APS Weekly News Bulletin, keeping you up to date and well informed on the Australian property market. Story number one, what makes a housing market boom? Michael Mudisick from the Mudisick Missive writes, not all cheap areas are good buys and a housing boom isn't just about affordability. It's about a mix of key factors. Here are the 7 indicators that signal potential growth. Number one being population growth. A booming market must attract more residents. If an area's growth rate exceeds its 10-year average, it's a positive sign. Number two, employment growth. Local job creation is crucial. Strong job growth fuels demand. Number 3, real wages. Higher real income support rising house prices. Sectors like specialist trades, tech, and research drive sustainable growth. Number 4, being tight supply. Housing shortages, less than 3 months of sales stock or under 2% rental vacancies push prices up in both sales and rental. Number 5, undervalued housing. So local investors snapping up properties and increased renovation activity suggests housing is priced below potential. In other words, an affordable housing market if it's undervalued. Demographic mix. A balance of young buyers, upgraders and downsizers sustains long-term growth. Education. Proximity to top-performing schools can drive price premiums. And he finishes off here with the X factor. Unexpected catalysts, overseas investment, infrastructure projects, or economic shifts can push a market into overdrive. While some areas may still boom, the post-COVID surge is unlikely to repeat. His take is our investors should focus on these 7 fundamentals for sustainable gains. Now, guys, as a bit of a summary on this thing, I agree completely in terms of stacking the deck. And that's what he's talking about here, really, when he's listing all these different factors and different fundamentals that you should apply to your investing strategy. Are all of these super relevant? I don't think they are to a market absolutely booming and seeing, serious growth. But if you stack the deck with 4, 5, 6 of these sorts of items all on top of each other, it definitely points to a higher than average, potential for a market to move into overdrive. So I think it's a good little summary here, I guess, of the different things you could be looking for and you should be looking for in terms of getting a boom location right. Story number 2, how Melbourne became the cheapest housing market. From Leith Van Onselen from Macro Business. Melbourne is now the cheapest major capital city housing market in Australia with a median dwelling value of $772,000 at the end of February 2024. Melbourne has experienced subdued growth over the past 5 years, with dwelling values rising by only 8.2% during this period, the slowest growth rate amongst all capital cities. Dwelling values across the combined capital cities have risen by 34% over the past 5 years, while regional values have risen by 57.2%. The stagnation of Melbourne dwelling values may benefit potential first home buyers as it could make home ownership more attainable in the future. The Victorian Labor government's efforts to curb investor demand through land tax reforms and hikes have increased the share of first home buyers in the state, reflecting the impact of policy on housing affordability. Now, in summary, guys, if the government were trying to make housing prices go backwards and make it more affordable, they seem to have done a pretty good job. They effectively, the Victorian government over the last few years have created a serious issue in terms of the house prices. We've seen them sliding back. It was pretty much the only capital since COVID to record negative growth, and we saw across most of Victoria anywhere between 10 to 20% drops across the state last year, and a lot of that coming from the Melbourne housing market as well. Now, yes, it is a good thing for first-home buyers, but I think it's also driving the market at the moment, and we're seeing a bit of activity down there at the moment. Stock is drying up. So while there was a small window of opportunity there for first-home buyers, I think it is going to create a bit of demand moving forward, and we're already seeing those stock levels go down, those stock deficits come through. So if you're a first-home buyer in Melbourne, you'd probably want to start getting ready, getting into the market soon, because it does look like that market is moving into a growth cycle, even though it obviously has held back for the last period of time. Last year going backwards, the last 2 years recording next to no growth. It definitely does look like it's going to be moving into that phase. Obviously, the things to be wary of as an investor in that state, the rental reforms weren't, the land tax reforms weren't the only thing that came in over the last 2 years. The rental reforms are also pretty brutal against investors as well. So you want to be all over everything to do with that and the compliance checks that come with now owning rental properties in Victoria. A lot of changes come through, and these are some of the massive factors that have driven Melbourne being into the 6th cheapest capital city in Australia. And especially when you look at the size and the population, almost the same size as Sydney, it does represent pretty good value at the moment. moment, especially compared to income. So it's going to be interesting to see what does happen with the Melbourne market. I think anyone that's a first home buyer, looking to get into the market, I think your window is going to be dwindling in terms of when does still present good value. But right now, it is a sixth cheapest still, only trailing slightly behind the other four that are in front of it. If you leave Sydney out of the equation, that's obviously significantly further ahead. But it'll be very interesting to watch how Melbourne plays out over the next 6-12 months and the next 2-3 years ahead as well. So, guys, that's a wrap for another APS Weekly News Bulletin. I hope you took some great value out of it. If you did, please make sure you send it on to someone else who might want to, hear about how to bloody pick growth markets, what different things they should be stacking the deck with, or how Melbourne became the cheapest housing market, might take around it on that side as well. So if you think someone could take some value, please send it on. And until next week, guys, that's another wrap of another APS Weekly News Bulletin.